Hey, family, it is March 27th. We are very close to the individual tax deadline, and a lot of you are experiencing a tax bill for the first time, and hopefully for the last time. Now, because I work with taxpayers that owe the IRS every single Monday through Friday, I realize that if this is your first time owing the IRS, you may be experiencing a bit of anxiety, chest pain, can't sleep at night. So I'm doing this video to let you know that you do have options to be able to negotiate with the IRS, whether that be a payment plan, maybe you can offer a lump sum. It all depends on your life circumstance. So before I get into the video, I do realize that everyone watching may not know who I am already. My name is Timalyn Bowens, and I'm America's favorite EA. I'm also the owner of Bowens Tax Solutions, located in Louisville, Kentucky. So it's a virtual firm. We serve people all over the country and actually at this point, the world. And what we specialize in is stepping into your shoes to handle your IRS issues. So in today's video, I'm going to talk about installment agreements. I'm going to talk about one, what they are, and two, some of the common type that you may qualify for. First things first, an installment agreement is an arrangement set up with the IRS that allows you to make consecutive payments to pay your debt over time. Okay? When you have a properly set up arrangement, this not only gets them off your back as far as any enforcement things, such as issuing a tax levy, sometimes it can help you avoid a tax lien, keeps your passport safe because, yes, the IRS can revoke your passport, keeps you safe from those things. Like I said, potentially a tax lien as well. Depending on how much you owe, how delinquent everything is, they may still issue a tax lien to secure their interest in the debt. But having it properly set up is also going to help you lower the amount of interest that you're going to pay if you did not have something set up properly. So now that we know what an installment agreement is, let's look at the different types there are. Again, if you're new to me, maybe you've not heard about this before, but if you've been here for a while, you've definitely heard about the guaranteed installment agreement. This installment agreement is for people that owe $10,000 or less. Okay? You haven't been in an installment agreement with the IRS within the past, let's say, 5 years to be safe. You haven't owed the IRS within the past 5 years. This debt that's under $10,000, you can pay it off within 36 months or less. And you're also tax compliant. So that means if you're a business owner, you're making your estimated tax payments. If you have a pension or wages, you have the proper amount being withheld each month. If you're not sure about whether or not you're doing that, you can check out the videos on this page for how to fill out your W-4 or W-4P. But if you meet that criteria, you may qualify for a guaranteed payment plan, also guaranteed installment agreement. If you're interested in that, I do have an ebook on my website that's called Guaranteed Payment Plan, and it walks you through how to set this plan up online, or it gives you the verbiage to say when you call on the phone. Okay. The next and most common type of payment arrangement that's still an installment agreement is a streamlined agreement. Now, over 50% of taxpayers that have a debt are going to qualify for the streamlined agreement. The criteria for this is a little bit different. All right. So maybe you have had a little kerfuffle with the IRS in the past 5 years. That's okay. But currently, you need to be tax compliant. In addition to being tax compliant, the streamlined agreement is for taxpayers that owe $50,000 or less. Okay. The criteria for the payment arrangement changes if you are at 50,000 and a dollar. Okay, so under $50,000, and you can pay this debt off within 72 months or before the debt expires. What does that mean? There's something called a collection statute expiration date. This is the last day that the IRS legally has to collect on that debt. They want to secure their interest. So if they're going to go into an arrangement with you, they want to make sure you're paying the debt off before that date. Or if the 72 months is up first, you can do that. And again, this is a streamlined agreement. Realistically, more than half of taxpayers that have a debt are going to qualify for this. Now, you can set up this arrangement by paper, you can mail in the information, or you can set it up online with online payment application, or you can call and set it up. Just need to make sure that you can pay it off within 72 months. Now, if the debt's over $25,000, you do have to do direct debit for your payment type, or else what'll happen is they will issue a tax lien. Because remember, IRS job is to collect those taxes. So over $25,000, you may appear to be a flight risk. So they'll issue that lien to make sure that their interest in the debt is secured. Okay. Next, we're going to look at the non-streamlined agreement. This is for taxpayers that owe 50,000 in a dollar or more. For these people, they really would love for you to still get it paid within 72 months. And even if you can, more information is going to be required of you. This process is a bit more evasive because you do have to turn in financial information. You have to turn in information about your assets, such as the equity in your home, in cars, 401k plans. If you're getting the drift, you really don't want to owe more than $50,000, right? You also have to show how much you have in different bank accounts, and you have to show them your income as well as your monthly expenses, and they will figure out what you can afford to pay. Now, let me tell you, before you go into any type of agreement with IRS, you want to already have an idea of what you can afford to pay. And let me assure you, your idea and definition of broke are not the IRS definition of broke. So, just a little freebie here. You can check out the national standards so you already have an idea of what the IRS is going to say that you can afford to pay. If you want to see a checklist of different things that you should consider before you even get on the phone to negotiate with IRS, you can also check out my website, americasfavoritea.com. Because one, remember the book guaranteed payment plan is there if you have the 10,000 or less, so you meet that criteria. But also, I have something called the back tax negotiation checklist. So if you go to the website and you look at the menu, you will see it as an item and it says back tax negotiation checklist. All right. Last but not least, in this these aren't even all the type of installment agreements. I think these are the most important that you should know of if you have a debt today, is the partial pay installment agreement. You know, there are different situations where you realistically cannot afford to pay what the IRS wants you to pay. Paying it off within 72 months is near impossible because the taxpayers that I speak with each day, they typically owe over $100,000. And I don't know about you at this time, a lot of people, even business owners, may not have that at free disposal to just give to the IRS. So, with a partial pay agreement, we're going to go through the same process, but the burden of proof is on you to show the IRS that you can't afford what they would like for you to pay each month. All right. So, with the partial pay agreement, you do have to pay until the debt expires, not just the 72 months, and you'll pay what you can afford. Now, IRS cannot put you into an agreement that's going to make you be in a financial hardship. It's your responsibility to figure out what is going to satisfy the IRS, but not bankrupt you. Okay. That's the whole purpose of the partial pay installment agreement. So, as you can see, with the four options that I just shared with you for installment agreements, you do have a number of options because, like I said, those aren't the only ones. Now, I know for a lot of people, even though I just broke that down, your mind might be spinning. You may have notices you haven't even opened. Don't fret. Breathe. Also on my website, americasfavoritea.com, you have access to my podcast, Tax Relief with Timalyn Bowens. There is an episode, which I believe is episode number 10, and I break down installment agreements and what you need to have together to prepare to propose an installment agreement with the IRS. Now, if you're already like, no way, Jose, I don't even want to do this, I have another opportunity for you if you qualify. If you visit my website, bowenstaxsolutions.com, we may or may not be a good fit to work with each other. The way to find out is by booking a tax relief evaluation so that you and I can get on the phone. And yes, if you book it soon, it will actually be me on the phone talking with you. What we're going to do on this phone call is we're going to see where you're at as far as how much you actually owe. If you don't know, that's fine. You want to bring your latest notices to the call, and we're going to talk through those notices. Now, there is a time limit, so I am going to drive the call a little bit to make sure it's as efficient as possible. We're going to go through the notices, get clarity on what the notices mean, and then you have a game plan from there. Okay? So remember, you have options, you know about these installment agreements, and even if you don't work with me, make sure you get the help that you need because back taxes shouldn't ruin your life.